What does a tight area signify? It basically signifies that there's subtle accumulation, sellers are getting worn out, and institutions are propping up the price and, accumulating as many shares as they can. In your mind, go through the price action here and identify to yourself, where is it tightening? Where does price action go sideways and tight on low volume?
Real-time analysis is based on what you've trained yourself to look at when the market's offline and the market's not, trading at all.
A pivot point is a specific level/area in a chart pattern where we can expect the stock to become directional. All right, next up, tight areas. So here's kind of my textbook chart for tight areas. Tesla in 2020, we've got the base that forms, the resulting move up, breaks out, and this starts a monster move from these lows. In your mind here, as you look at the chart, we're going to show the tight areas on the next slide, but in your mind, go through the price action here and identify to yourself, where is it tightening? Where does price action go sideways and tight on low volume for, at least 2-3 days? That's kind of how I visualize it. Where does it get really tight? And what does a tight area signify? It basically signifies that there's subtle accumulation, sellers are getting worn out, and institutions are propping up the price and accumulating as many shares as they can. And often tight areas resolve in the direction of the prior trend. So they can be a pause in the downtrend where for a little bit, buyers are fighting the trend and holding it up, but then the sellers take control. The same thing in an uptrend. We move up, then we go sideways, and then we get tight. Sellers are getting absorbed, and then we resolve to upwards for the most part. Obviously, the trend can always change. But let me know, think to yourself, looking at this chart, where does it get really tight on this chart? And this is a key thing to be able to identify on charts.
And repetition's key here, right?
Yeah.
That's why I say, set yourself a Saturday morning reminder and just maybe, once a week. Some people should do it more than once a week, depending on the stage you're in. If you do this, you're building in the back of your mind, let's say, basketball players, when they practice versus when they play a game, those are two very different things. In the game, it's more instinct. When they throw a pass, it's just more natural because they've kind of practiced that, right? And real-time analysis when you're being guarded versus practicing something, a lot of back of mind, just the way we work as humans, like things when they're based on, I've seen this before, and I feel, you will develop a gut feel for those situations. As of today, I trade based on, when I'm placing a trade, I kind of, in the back of my mind know that this feels pretty good, right? Versus another trade I might have placed or forced a little bit. And you kind of develop that through repetition. Like look at as many stocks as you possibly can. And I'm getting very excited about, we need some sort of simulator to do this.
Yep.
Where you can't see it's Tesla, you can't know anything. All you know is price volume, maybe whatever indicator you want to put a MACD, you put a MACD. But that repetition will help you so much because real-time analysis is based on what you've trained yourself to look at when the market's offline and the market's not, trading at all. Those things just get better and better with repetition. So.
Yep. So I didn't see enough responses, but I'll give you guys. I'll let you guys pass today, but here's the answer. This is kind of my work about where it gets tight. First, in the downtrend, we get tight relative to prior action around here for a few days. We resolve to the downside. We form again. Look at this first higher low that forms, the first higher high that forms. We get tight for maybe 2 days in here, resolves to the upside, pull back a little, get tight again for 3 days, move up. This was earnings, I believe. Yep, earnings right there. We absorb that selling, move up, again, gets super tight. And then just throughout this area, it's tight, moves up a bit, tight, moves up a bit. The tightness is it's just such a tell that a stock is under accumulation. So tightness here, gets super tight for 2 whole weeks, breaks out of, if you want to call this a cup and handle, you can just keep it simple and say it broke out of range here. Again, it moves up, gets tight again for 4 days, moves up, a little bit of selling, holds the moving average, moves up, it gets super tight. This is probably the tightest it is on this entire chart. We do a little shakeout, but where do we hold? The moving average, as well as if you draw a line from this high over here, we also hold that same level. That's another reason why this level is key. You always want to be aligning different areas of confluence, different areas where different strategies might look to enter stock and build positions. So after this, and even this is tight. It's just not quite as tight as this, right? I mean, this goes pretty much sideways for 4 bars. Again, it's not as tight as this, but it is tight. And then this really starts to move. We get a 20-30% move in just a few days. We tighten up again and move higher, form another base, get really tight within this base, have a little bit of a shakeout, and then we have a kicker candle, expectation breaker. It starts another move, and look at the volume pickup on this breakout, and look at the volume pickup as we broke out of this tight area. So during the tight areas, you want to see a decline in volume overall. That's telling you supply is drying up. And then when we resolve to the upside or downside, depending on what it is, we want to see a pickup in volume, and that's key. So
And there
yeah,
there's a very good point by one of the folks in the chat. It's so obvious in hindsight, right? It's so obvious that the stock is continuously moving up and it seems to be very easy. But what we're trying to, what you should, I guess, focus on and understand is, can you identify this as it's happening,
yeah,
right? Then you can, if it moves out of that range, you can make a decision. Can you identify this as it's happening? Then it moves out of range, then you could get in on this. So the first portion of, the first part of it is trade identification. What allows, a setup to be something that's good enough for you to track? What are those characteristics? What do they look like, right? And then the second portion is, you've identified, okay, I want to have Tesla back in May of 2021 on my watch list. That's your first step, the very minimum requirement, the very basic requirement that you should put for yourself. Now, how will I enter? Based on, if this tightness resolves to the downside, I will do what? If this tightness resolves to the upside, what am I doing? Your actions are then based on your trade identification. So there's a step-by-step, method where you have to build. And as you review more and more charts, you have to build that identification. It has to be, in real time. You're supposed to be doing this, and we don't know what's going to happen in the future, right? Hindsight is always 2020. Yes, this is in an uptrend, super easy. Just look for tight stocks, and if they break the range, you go to the upside. That's a very simplistic way of looking at it. The other way is, based on what I've seen in the past, this stock is getting tight, the volume is relatively low, and if it resolves to the upside, this is a potential position I will put on. This is the if it lines up with another pivot, that makes it another, even more important area on the chart. I've seen this before, and when I traded something like that a while ago, or when I studied that X breakout a while ago, this seemed to be a very important point on that chart, and that stock did this. There's a probability that this stock will also do this. So you have to be able to identify these in real time. That's your first trade identification. If you don't master just the very basics of, I will have Tesla on my watch list just to watch to see what happens, it's kind of like a whack-a-mole feeling. Then you don't know which one, what stock, what to look for. You have really no clue as to how you'll go about it in the markets. And then, when you look at these, all you're kind of seeing is, oh, this is easy, it's hindsight. I could just look at type. So real time trade identification, then building which we'll get into over the next 7 weeks. How do you plan those out? And then how do you position size based on that? What is your framework for market cycle telling you? And when those probabilities align, this thing, breaks the upside, you're acting, and you're acting real time, because you've identified it, you've done your homework, you've connected your current state to some past state, you've studied and done your homework, and the market is going to reward you when you look at it in real time. So I
yeah,
think there's bits and pieces to this puzzle. And this first piece that we're going over right now is a reading price action. it's the first identification puzzle, and then we'll add bits and pieces to it so that you could increase your probabilities going forward.
Yeah, we're going over the winning characteristics, the building blocks that allow you to identify constructive price and volume action. And in hindsight, yeah, it's easier to point out the tight areas, but in real time, this was one of my biggest winners in 2020. It was one of Ross's, I think it was Ross's biggest winner in 2020. Oliver Kell was all over this. And why was that? Is because they've studied the template of winning stocks in history and identified the price and volume as well as fundamental characteristics that lead to the potential for something like this. So at this point in time, they notice it's tight, it's a constructed pattern, it's in a leading group, it's got triple digit earnings growth, and that's why they're focused on an entry in that. So I think we can leave it there. But again, just being able to identify the tight patterns and noticing that characteristic takes you a long way, right?
Yeah,
So
I think that's
yeah.
something if Nick, I know Nick's here and watching. So I think like breaking down how is a trade decision made? This is the very first building block. It's identifying, it's the identification and placing something on your watch list. The second, obviously, what is your entry tactic going to be? What is your risk going to be? What position size will you place it at? And as you sum those factors up, then you increase your probabilities of moving from a stage 2 to stage 3. But this is the very first building block that we're focused on.
Yeah, and I'm not sure if we got this question before I explain it, but it's worth going over again. Why is tightness a sign of accumulation? It's a sign of accumulation because price is going tight as supply is drying up, volume is decreasing. What's that telling you? It's telling you that institutions are supporting that stock, keep subtly accumulating as the sellers that are there wear out their positions and ultimately sell out everything. And what does that create? That creates a supply and demand dynamic where there's very little supply coming to the market, and we've got the institutions with some demand supporting it, and then finally something will shift where another buyer comes in or the institutions decide to ramp up their accumulation, and it just tips the scales, and suddenly that creates the uptrend. So basically the tight area is a balance in supply and demand where one of those is getting worn out, and then we're waiting for where the scale is going to shift next. I think that's an okay way to explain it. So reading price action pivots, again, we won't, this is a very simplistic view, but we're going to build and build and build. So how do I define a pivot? A pivot point is a specific level / area in a chart pattern where we can expect the stock to become directional. Rye, I think I stole that from you, pretty sure. But basically, it's a spot that's in the eye of the markets where, again, the supply and demand scale is about to shift. This is where the energy can get released, both to the upside or downside, depending on the setup. For me personally, it's often the high of a tight range. So if we go back to Tesla, through these highs is a pivot, through these highs is a pivot, through these highs is a pivot. But it depends on the setup, right? You can define it many different ways. A base pivot and a consolidation pivot are slightly different, but they're looking at the same thing. There's a move up, a consolidation, and then a continuation, right? And it's the same to the downside. A move down, move up slightly, and continuation. And that low there is the pivot in that case. So again, pivot point, I think, is that the exact same slide? Yeah, that's the exact same slide. It's just really important. That's why we want to emphasize it again. So here's real time. Again, this is Tesla. These are the highs of the range. This is the pivot point, this line of resistance. This line of resistance is the range. And this could be a 5-minute chart. This is a daily chart here, but it could be a weekly chart, right? A base pivot is basically looking for a longer consolidation on a weekly. Here we're looking for shorter term actionable pivots on a daily chart. It just depends on your time frame. But when it comes to pivots, right, anything that you want to really emphasize?
Yeah, let's actually do
yeah, let's go through it.
Let's actually do like a bar by bar type of thing, just to get, just to emphasize the point of, what we're trying to get you guys to do as what we feel, is very important to do as well. So if we pick up this stock at this bar and we see another level of tightness, I would draw my pivot here at the top side, and I would say if this stock moves above $69.50, I will be potentially interested for this to break out of that to the upside if the volume is there, right? So then I start tracking it. Okay, the stock moves down. The stock moves down. I have nothing to do. I will continue tracking to see how this is functioning. The trend, the primary trend is to the upside. So I don't really see a huge reason just based on this chart alone. We don't know some of the other factors that could, go into this. So there's nothing to do for me yet. The stock closed back again. It's above the rising moving average. The volume is picking up. Well, that's a subtle sign, that my expectation after this third bar over here is that this stock will now break the moving average because the volume is picking up as it moves down. Well, what does this stock do? It doesn't break down, breaks my expectation and moves up. And now I'm, as of this bar, I'm kind of neutral. I don't know what's going to happen. I still don't know what's going to happen at this bar, but I will continue watching it through the top side pivot. And if and when it does that, I may be interested, depending on just if we take isolation of this price action and volume, I may be interested as to what's going on. So on this next bar, my expectation is it could potentially just go out of there. But what I would like is some sort of consolidation to happen personally. And that's what we kind of get. This consolidation is tightening formation. So this bar, we get some tight close. Another bar, we get a tight close. And what I'm starting to notice is the volume is starting to dry up as price action is tightening. This bar, now I'm ready. I would be kind of, this red bar that we see, I'm ready because we're seeing tightness in price action with lower volume happening. And I will be anticipating because I can, and I've seen this before somewhere, right? And I'm connecting some previous day. I'm ready for this thing to maybe break out this next day to the upside. If it does, I will act. If it doesn't, which it didn't, it put in even lower volume on this day and continued to trade tight. What did we say? Tightness in price action on decreasing volume tends, could potentially result in a bigger breakout. So continue watching. Hey, this pulls back into a rising moving average. It pulls back in on, increasing volume. What's my expectation the next day? What's my expectation? You could set yourself an expectation. That's absolutely free to do in the markets. Nobody's going to question you, right? My expectation is this will continue to the downside. That's my expectation on the very next bar. Hey, it doesn't do that. It again breaks my expectation, continues to trade within this tighter range. I'm expecting this next blue bar that went up to be down because we saw increasing volume to the downside. My expectation is some sort of follow through to the downside the next day. That didn't happen. This continues to kind of tighten up. And what we see is eventually that pivot that I started tracking on this very day. Again, the primary trend is to the upside. The longer term moving averages are also pointing to the upside. So my bias from here all the way to here, unless the stock completely breaks that moving average to the downside, will be, I will have a bullish bias on this top side pivot. And eventually what it does is it breaks this range on increasing volume and volume that is comparable, that is higher than a lot of this consolidation that happened. And when that happens, something's going to click in my mind. I've tracked this long enough. Likely the market is pretty good that day as well. I can manage my, there's increasing volume coming in. We'll get into the very granularities of how you can enter, what position size, etc. later. But this is now breaking to that upside. I tracked this for a couple of weeks. It's running, it goes, maybe I get, my entry at the top of that bar. Maybe I get my entry really, at the beginning of the day. Those granularities we'll get into, but the general idea is you track this, it triggered to the upside and we get a rally out of it. Be it you enter at the top of that consolidation, somewhere closer earlier in that consolidation. That depends on your entry tactics, but that's the identification part of it, right? A name that's primarily in an uptrend is tightening on low volume. When I'm expecting it to break down, it moves up. When I'm expecting it to break down here, it moves up. It's continuously breaking my expectations of what I think is going to happen, and it eventually breaks out to the upside. So if you do that exercise, right? Historically, it will help you real time. It will help you week to week kind of gauge that price action that's happening. And that's, it will allow you to build in the back of your mind this instinct, like you'll build this and it will become more natural and you won't even notice, but you'll when you feel good about something and it's happening, you'll position size a little bit more because you've seen this before. So that's what we kind of want to emphasize. Now, how do we narrow down to a Tesla? What factors, how do we build a watch list where the probabilities of winners being on that watch list? We will get to that. What I'm trying to get you guys to focus on right now is if there's some expectation breakers happening, there's tightness in price action with low volume, learn to identify that first. If you can't learn to identify that first and you just want a recipe for this to be on your watch list magically, you're not going to go from stage 1 to 2 or 2 to 3, just skipping from stage 1 to 3. That's never going to happen. So Richard, you could take it back.
Yeah, no, that was fantastic. And yeah, I want to emphasize a few key things. First, obviously, we're looking at the chart in hindsight,
Yeah.
but I bought it on this day and I added on this day because of exactly what Rye was talking about. And the concept of an expectation breaker is so, so key. And that's an amazing nuance here. Here, when it's forming a tight bar, ignore everything, to the right here. We're just talking about this tightness. This gets so tight. I was waiting for it to break the topside pivot and this pivot here because they're lying close together. That adds power. Again, the more people who are looking at a similar level to buy, the more power that's going to have. Then on this day, I was super disappointed because it broke my expectation. It broke the low of this range. However, it's not done yet. I mean, it's still above a rising 21 EMA. It's still above this low here. There's nothing really wrong with the chart. Just on this day in particular, for whatever reason, it wasn't ready yet. And then these bars where, again, another expectation breaker, this time a positive. This was a negative expectation breaker. From this type of setup in a bullish pattern, we expect it to explode out and go. We break to the downside instead, but there's no follow through. In fact, we try to go lower and look at where they close this bar. I mean, we talked about what's going on, supply and demand, buying pressure, selling pressure. Who won the tug of war on this bar, right? The buyers. Then the next day, again, lower volume, so there's less emphasis to what that day is doing. Price action is still key, but just keep that in the back of your mind. I mean, it pretty much goes sideways. We end near the lows, but lower volume, hold the rising 21 EMA still. And then the next day, this is why I bought it. Again, we tried to push lower, and then we broke out through this high. The sellers could not push this any lower. Volume a little bit higher than the next day. And then the next day, we get the real breakout through this pivot as well as this pivot. Again, this is kind of more intense than I wanted to go today. This is a little bit more advanced, but because these pivots are so close together, it adds fuel to the fire. And this lines up with, if we go to the slide before, this lines up with the top of the base. So there's a pivot from a higher time frame that I think is like right around here or even closer to here. So everything is lining up. All the pivots are lining up. The expectation breakers are telling you that net, it's still under accumulation. And it just takes off and goes and continues on and has continuation days up, which is the best sign a breakout's going to hold. And I don't want to go bar by bar just because it would take a lot more time of this consolidation. But this is homework for all of you guys. Go through this section and go just as Rye did through it. And what does each bar tell you? And you've got a lot of days where they try to push it lower, they close it strong. They try to push it lower, they close it strong. It stays tight. And then ultimately leads to the breakout, tightness, and resulting tread setup of new spots to get in. So no, I think that's awesome. And hopefully you guys enjoyed that and found that helpful.